We thank the management for giving us the opportunity to host this call. The management is represented by Mr. Rajesh Bhatia, the Group CFO, and Mr. Yusuf Nasrullah, Investor Relations. I now hand over the call to Mr. Yusuf Nasrullah. Over to you, Yusuf.
Thank you, Mr. Prashant Sharma. Good evening, everyone, and I would like to welcome you to the third quarter FY22 earnings call of Uflex Limited. On the call today, we have a Group CFO, Mr. Rajesh Bhatia. Our discussions may include predictions, estimates, or other information that might be considered forward-looking. While these forward-looking statements represent our current judgment on what the future holds, they are subject to risks and uncertainties that could cause actual results to differ materially. You are cautioned not to place undue reliance on these forward-looking statements, which reflects our opinion only as on the date of this presentation. Please keep in mind that we are not obligating ourselves to revise the publicly released result of any revision to these forward-looking statements in the light of new information or future events. I would also like to emphasize that while this call is open to all invitees, it may not be broadcasted or reproduced in any form or manner. Let me highlight a few achievements of this quarter. Uflex net profit jumps by 96% year-on-year to 313.2 crores. Net revenue rises by 64.6% to 3,474.3 crores. EBITDA rose by 48.5% year-on-year to 618.7 crores. We have the highest ever quarterly production and sales volume. I would now like to invite Mr. Rajesh Bhatia, Group CFO. Over to you, sir.
Thank you. Thank you, gentlemen, for taking your time out on the weekend to be on this call. I'm sorry that, we should have, sort of planned so that, we could have this call on the weekdays just to get a better audience. And, we'll take care of this definitely in the times to come. But sometimes, this becomes inevitable, so please excuse us for that. I think all of you would have already gone through results. It's a fairly decent, financial performance. Notably is a 38% volume growth, which has actually meant that, all the overseas and Indian packaging films capacities, except for Nigeria, which was at about 60%, all of them are above 95% utilization levels, including the enhanced capacities, which came on stream in the last financial year and this financial year. And I think the scope for any increase in the volumes now will come from, debottlenecking from existing plants, which we normally do because, once the warranty periods are over, we are able to increase the throughput by running the plants at a much higher speed. And also future implementation of our project in Harvard, CCP line in Dubai, and our Sanand plant expansion, doubling the capacity there of the aseptic packaging plant to about 7 billion packs a year. We also had during this quarter, the raw material prices continue to increase, and on a year-on-year basis, depending on the territory we are in and depending on our contractual commitments from the suppliers in terms of the prices. So the continuous pressures on the raw material pricing side is there in this quarter itself. Of course, on a year-on-year basis, it is as high as 80% in certain territories. And in India, if I were to say, it's about 50% increase in the raw material prices for the PET films, and about 26% increase for the BOPP raw material prices. So overall, but as I said that we even had a similar impact in the last quarter, but we changed our strategy where last quarter we were always happy about that we have order book position which is 1 month, 2 months. We changed that strategy to book for the shorter durations as the raw material prices were rising. And we suffered in the last quarter because of this, because, even though the volumes were higher and the selling prices also were higher, just because, we were carrying a higher order book, we couldn't convert that buoyancy into our higher profitability margin, but that position we corrected and we started booking for shorter durations our order book position. And that's what coupled with, if I see on a quarter-to-quarter basis, the raw material price increase is still manageable, maybe about 3 to 6% range generally. So, and driven by a larger volume, which led to a higher, a much better absorption of the overheads. So EBITDA for the year, for the quarter is higher at about 619 crores, roughly about 18% of the top line. But if I were to negate the impact of the raw material price rise and just take the volumes, I think the EBITDA is close to about 20% odd or so on a constant raw material pricing basis. The working capital, the liquidity position of the company continues to be very good. We have, as we improved our production, obviously the working capital requirements go up because of the higher prices, higher production levels, and we've hardly borrowed from the markets, from the banks to fund those. And lastly, all of that we tried to ensure that we use our liquidity to for the enhanced working capital requirements for the extra volumes and the extra pricing that is we have to pay. Crude already we've seen that continues to spurt. It's the Brent is as we speak is above $95. So the pressure on the raw material prices is continuing. But I think equally notable is that all of that has been passed on, and rather there has been a margin expansion in this quarter just because we changed the policy to not to have a very large order book and move to a smaller size of the book. The demand levels in BOPP and the PET industry continues to be good. In fact, in the packaging space also, this quarter we had higher volumes marginally, but there also the prices went up dramatically. But in the packaging space, the EBITDA margins still continue to be under pressure. They were a bit better than the last year, but still not a happy situation. And it's only the packaging films and the aseptic packaging films category which is continuing to give us the desired operating and the EBITDA margins. And that's what has led to almost about 50% increase in EBITDA on a year-on-year basis, and almost even on a quarter-to-quarter basis, if we see EBITDA increase is about 46%. The PAT is up about 96% on a year-on-year basis and about 84% even on a quarter-to-quarter basis. So overall, again, a very decent performance set of numbers, 38% volume growth overall all across. And I think the next round of larger growth will now come from, the balance we have in Nigeria, where we're still operating at about, for the quarter, we operated at about 60% capacity. So we have scope there. Rest of the plants, as I said, that, almost are at above 95%. So between 95, we can take it to about 105, 110 when we fully debottleneck the machine. So there is a bit of an upside there. But as I said, the next round of upside will now come from these three expansion projects which are getting completed in FY23. Aseptic packaging is going to be getting commissioned in probably we'll try for this quarter, but if not this quarter, the first quarter for sure. Harvard will happen in Q3, and the Dubai CPP will happen probably in Q1. That's what we will try to keep on it. But if there are slippages in terms of the travel restrictions and all that, probably another 1 quarter as a fallback. So that's basically the highlights for this quarter, and I'm happy to take any questions you may have on our financial performance or on our performance in this quarter.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yash Dantiwadia from Dantig Equity Research. Please go ahead.
Hi, Mr. Rajesh Bhatia, sir. Firstly, I'd like to congratulate you and the entire Uflex team on a stellar quarter. Hello, am I audible?
Yeah, you are audible.
Yeah. So my first question is, with the rising crude oil prices, since this quarter we've seen some passage of the rising input costs. I want to understand that will we able to continue this trend of passing on the input costs?
I think, as I said, that ever since pandemic has happened, the demand momentum continues to be very strong, and that's where till date we've been able to pass on the costs and also improve the margins on an overall basis, because typically you may find that EBITDA margins may still, on a year-on-year basis, you may still find a bit lesser because if the top line is growing by 65% while the volume growth is only 38%, the rest of it has come from a price increases, which is basically driven by the higher raw material cost. So your ratio of EBITDA to turnover will always look a bit skewed, and that's why I explained that if I were to take it at a constant prices, the EBITDA margin is about 20%, which is fairly decent. And based on the present demand dynamics today, passing on the higher raw material prices does not seem to be much of a concern.
Okay. Also, you said that you reduced the order book time, right? Timeline. Before you used to take orders for, I think, around 1 or 2 months. Can I understand how you've reduced it and by how much?
So depending on the territories, in certain cases now we're doing only a weekly order book position. In certain cases we still do a fortnight. We still do in certain territories for 1 month. Also depending on where the demand concentration is, we deciding as to how do we do that. But where we have a much larger demands coming in those jurisdictions, we largely reduce it to week or 10 days kind of time as against to 30 to 60 days, 30, 45, 60 days, going as much as we've been going earlier.
And the raw material pricing, how is that updated for your company? Is it per week or monthly?
So the raw material prices are linked to the index for a month.
Okay. So it's monthly.
Mostly it is that. And in case of homopolymer, which is used in BOPET, they are more or less spot, you can say. Spot is, every time I give an order, suppose I give an order for the next 15 days. So the price validity is for the next 15 days, and then when the prices are going up continuously, from that side also you have to be cautious that you don't have stocking at a much higher cost, because so long as you are able to pass on that extra cost to the customer, so that risk at least you don't want to keep it to yourself, that you stock or you commit yourself for a quarter or for a larger duration, and then the spot raw material prices fall and you still committed at a higher level, which will erode your margins. So because the demand momentum is there and the market is able to absorb the higher prices, as the higher prices are declared by our suppliers. So even on our side, for our raw material sourcing also, we are not committing for very long.
Let's one more. I have a hypothetical question, if that is okay. My question is, if crude oil crosses, let's say $100 per barrel, as per the present demand situation, do you think we'll be able to continue the operating profit margin of, let's say, around 17 to 18%? And if you could give a guidance in this way, it would be very great, because right now, the way crude oil is moving, it really looks like it's ready, and obviously the inflation crisis, or I don't know how to put it, but whatever is happening in the crude oil market and how inflation is increasing day by day, do you think these operating margins, I think they're at 17.55% this quarter, do you think they are sustainable and you'll be able to sustain these margins even if crude oil crosses $100 per barrel?
So as I said that, the price today, the margins, so I have to look at the margins in the absolute terms now. Now, if from here the raw material price rises, say another 20%, and that 20% gets added up to my revenue, and my EBITDA margins will look a bit skewed. But, in our industry, the margin per se is less of a monitoring factor. What we look at is that per kg or per ton, what is our EBITDA, and yes, so long as that number is being maintained despite the higher prices, while the the EBITDA to turnover ratio you may find it a bit skewed, but I'm looking at maintaining my EBITDA per kg or EBITDA per ton margins, and which is where our concentration is, rather than looking at 18% EBITDA margin or so. So the raw material prices from here, go on, say, by another 50%, which I have to pass it on, I know for sure that my EBITDA margin at that stage would surely not be 18% or so, would be lesser. But if I see my overall quantum of that EBITDA, I think that's where our concentration is. That's where we want. That's what we want to maintain.
Yes, sir. Sir, one last question. I'm sorry for taking so many questions, but my last question is regarding the debt. When I think the capex is going to get finished this financial year, hopefully.
Not this financial year. It will go into the next financial year. Let's say Q2, Q3 also it will go to.
But this financial year Q2 or next financial year Q2 you're telling me?
Next financial year.
Which expansion is, I think the Sananand is supposed to...
Dharwad.
Okay, Dharwad will take that much time. Do you think we've hit the debt ceiling, or do you think there's more on that line to come in, the debt?
I see the long-term debt as on the 31st December is about 2,500 odd crores. So I think if I look at long-term debt, and another 1,000 crore is the short-term debt, which is basically, all of the working capital. So I see that, probably a ceiling of, say, long-term debt ceiling of about 3,000 crores.
So when can you give a guidance that which quarter do you, or which...
Q3 somewhere.
Q3 of next year?
Q3 of next year.
So that's when you think we'll hit the ceiling, right?
Where we complete the
capex cycle.
Extension, yeah.
Yeah, okay. Thank you so much, sir. And I would like to congratulate you and the whole team again. This was a really stellar performance, and I hope the stock starts reflecting the performance in terms of its price. Thank you so much.
Thank you. The next question is from the line of Prashant Sharma from Quantum Securities. Please go ahead.
Yeah, thank you for the opportunity. And sir, congratulations on good set of numbers. Sir, basically I want to know about your pricing power. So let's say, the raw material prices start decreasing, price of these raw materials start decreasing. Now, since you have shorter contracts, can your customer demand lower pricing? What I mean to say is, do we have some pricing power to, offset it for some time?
Difficult thing, because, whatever our contractual commitment from our customers are also, we've not seen that, people backing out from there. So, it suited us to move from a higher number of days to a lesser number of days, given that the raw material prices were rising. But, we've rarely seen any customer or supplier not, meeting their commitments with respect to the committed offtakes by them. So, if we are taking a lower order position book as of now, when the prices continue to fall, I think we may change our strategy to look at a higher period book again. But yes, you will have to assess that situation, and it might so happen that you may have a lag of 1 month before you actually get to see whether whatever is now the fall in prices, is that for real, or that is just transitory. The same thing what's happening in the stock market. We always see that the market comes down by 5% or so, and then again it gets back. So
right.
Similar thing we are witnessing in our raw material, levels also. So as of now, we are happy having a shorter book. But that strategy we'll always be live to the situation in terms of our reaction.
Oh. Sir, my next question is regarding your capacity utilization. So what I want to know is how much of, more sales extra volume can be generated from our existing capacity, given that we already have a, 38% jump in the volume numbers.
So as I said that, this quarter we have, other than Nigeria, we almost hit the ceiling. So the new capacity, whenever you set up the plant initial for a year or, maybe a little longer period, you operate the plant as per the supplier's specifications. And then beyond that period, when your warranty is over, when you tested the machines fully, you have you can increase the speed of the machine because, whatever, all these machines, whatever in our industry are all European machines. So, normally they will have an extra built in for about another 10% to 15% or so. So that's the optimization you can do once you hit the ceiling as per the designated capacity by the supplier. So in the areas where we are already say 95%, probably another 10% we can go over and above our designated capacity as of now.
Okay. Yeah, that's all from my side. Thank you, sir.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Jatin Kumar from Alpha Capital. Please go ahead.
Hello, sir. Correct set of numbers. So my first question would be on the current spreads. As in this quarter, the Q4 quarter, half of quarter has already passed. So any guidance on how are the spreads putting up in this quarter versus what they were in the previous quarter?
So this quarter, as of now, continues to be extremely good.
Okay, sir. So as in similar to last quarter, or are they even better than the last quarter?
Very difficult to say, but as of now, I can say slightly better than the last one.
Okay, sir. And sir, any long-term color on, say, 2-3 years color on how our spreads how much spreads do we expect? Do we expect to hold the current spread stay, or do we expect them to normalize a little bit going forward over 2-3 years?
They should normalize a bit. As of now, the whole world is living on higher prices, higher inflation, higher profitability, whichever sector you take it. And even in the sectors where the demand is constraining, like automobile and all that, still, they are riding on higher prices and still delivering good numbers. So, today the situation continues across the world to be higher prices, higher inflation, and higher margins. And I think I saw one presentation where they said that this is probably the first time the corporate India, the top companies have a net profit margin of above 10%, which probably hasn't happened so far. So I think this concept of shortages, this concept of supply chain disruptions, higher freight, which clearly seems to be a case of not so much of a capacity constraint, but the freight prices going up by a factor of 10x since pandemic. While the other commodity prices may have only gone up by 30-40%, I think they'll be in the next couple of years. They'll be return to normalcy. This does not seem to be sustainable for a very long run. And somewhere, whenever in any industry, if the margins continue to be very high, obviously the new investments flow in there, and the extra capacity which gets built up during the high times always takes care of helps in normalizing the situation. So yes, next 2 years or so, definitely the normal times should return, whether it is because of the new capacity that gets created. Even today, the new capacity that gets created has raw material sourcing issues because, now the free flow of raw material from one geography to another geography is possible, but then, the cost at which you are now going to do it is ridiculous, and sometimes, you are better off buying locally rather than, getting supplies from, countries like China or Indonesia or, Thailand. So I think those new realities are setting in for the new capacity, and that has to be seen. Having said that, today, the raw material people also are making a much higher margin than what they were pre-pandemic. And so there will be capacities that may come up in that space itself, which will again, rationalize the prices. But if the freight prices remain so high, that disequilibrium, where the capacities are and where the consumption are, will remain a challenging issue.
Sure, sir. And sir, we are saying that we have reduced our contract duration, as in with clients we have moved to shorter duration. So any impact on volumes due to this change in policy, or volumes we expect to stay strong only?
No, so long as demand is robust. So all that I do is now. So if there is a customer X and he comes to me, so I tell him, and he wants 200 tons. I tell him that, I'll as of now book you 70 tons only, which I'll supply you in the next 10 days or so. And, we'll have another 70 tons, which you can book after, or even if you want to book it that way, fully, then the pricing will always be subject to, sort of change. So, as I said that, demand side is there, so, that's where the 38% volume growth has been achieved. So, as of now, on the demand side, not much of, pressures are seen.
Sure, sir. Thank you and all those.
Thank you. The next question is from the line of Kamalji, an individual investor. Please go ahead.
Okay. Thanks, sir, for taking my question, and congrats for the great set of numbers. Sir, my question is, what is the R&D expenditure to the sales ratio?
We can give you offline.
Okay. Sir, just a few months back, there is a patent Uflex has filed. So what will be the opportunity size for this particular patent, and when it can be materialized?
I don't know which patent you are talking about.
The chemical one, 340937 something, 903.
That has very limited, opportunity at this point in time. That's what we see.
Okay. And sir, recently I think you are supplying some packaging solution to the ISRO as well. So what will be the opportunity size in that particular area?
Again, all these are niche products, but the market size continues to be less. They are more like your showcasing of your capabilities in terms of some of the very most serious stringent requirements for some of these organizations that you may meet. So ISRO is not a bulk consumer of these, but then even if you sell small quantity for some of the specialized products, the margins will always be better because of these small quantities. And whenever you create specific as per their requirements, obviously you will drive higher pricing as well. But as I said that there is no volume game here. It's more of a showcasing of your technical capabilities as to what you can deliver.
Okay. Sir, in last call, you mentioned about some delay in supply chain mechanism. So whether it has been improved significantly or it is still the situation is there?
No, the supply chain issues continue to be there, albeit they are much better as compared to Q1 and Q2, where the raw material availability itself was becoming a challenge. The availability is no longer any challenge, but now the challenge has shifted to the landed cost of these raw materials, depending on your jurisdiction from where you were sourcing these, and the landed prices in some of the territories like Mexico or USA or Europe, which were where we were importing some of these items. So the focus is now more on the landed cost of these price inputs rather than any availability issues.
Okay. And sir, whether our payment receivable will be improving in the forthcoming quarters, or the receivable versus the payment mechanism will be in a balanced state? Because
payment mechanism continues to be the same. Payment mechanism, there are no.
Okay.
It has not got any effects of that, because your customer profiling is almost the same.
Okay, sir. In this particular financial year, how many patents we have received, or we have filed, or we are getting some patents?
I don't think so. Any patents we have received. If there are any filings, I'll have to get back to you offline.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Saurabh Sharma, an individual investor. Please go ahead.
Yes, hello, sir. Hello, Bhatia. First of all, congratulations on...
sorry to interrupt you, Mr. Sharma. Your audio is not very clear. May I request you to come on the handset mode and speak a bit louder?
Is this any better?
Yeah, please go ahead.
Yes, hello, Bhatia. So congratulations on the numbers, especially the bottom line that the company has delivered. It is quite heartening to see in excess of 20% margins on the overseas operations, overseas packaging films operations, and that brings it more in line with our peers. So, that is really heartening to see, and congratulations to the entire team and you as well for accomplishing this feat. My first question, sir, is about the gross and net debt as on December 21. Could you please share that number if you have it handy?
So the long-term debt as on 31st December is 2,500 odd crores, and long-term and short-term put together is 3,500 odd crores.
And is that the gross and net number, are they the same?
So the cash on hand is about, that is the net number, 3,540 crores. About 700 crore is the cash in hand.
Okay. Great. All right. So, sir, considering the cash generation that is going to happen, and things, of course, are looking fairly all right now, are there any plans to distribute the cash to shareholders yet?
Abito, I think, as of now, we'll be looking at completing those projects. And as I said, even during this quarter, the cash in hand has improved by close to about 100 crores. we've not borrowed much from our working capital bankers. Rather, we've used the cash available in the system to fund your higher working capital requirements driven by the higher raw material prices and higher receivable levels, because both of them get impacted. So we've not looked at any borrowing, substantial borrowings in this quarter. If you say on a net basis, the increase in the borrowings between the last quarter and this quarter is only about 125 crores net borrowing.
Okay.
And we are almost close to sort of finishing our expansion projects.
Okay. All right. The reason, Bhatiaji, I ask about cash distributions is from a technical perspective, from the market perspective of the stock price. What happens usually is that there are different
comment on this call about any management policy matter on the distribution.
Okay. My only limited point, Bhatiaji, will be about the kind of shareholders that the stock attracts. There are different kinds of investors. There are people looking for capital gain. There are people looking for distribution in terms of dividends also. And there are many institutions, long-term players. You can take insurance companies. You can take long-term institutional investors, mutual funds as well for that matter. There are several dividend yield schemes also, like you would know. And, that kind of increases the marketability of the stock. So that was my only limited point.
I think very good point. It's a
okay.
Point.
All right.
We'll definitely take that into account. Your thought process, we'll definitely keep that in mind.
All right, sir. My second question is about the Nigeria plant, Bhatiaji, and you said that it's operating at around 60-65% of nameplate capacity right now. So are there any reasons for the not complete utilization? Because as I understand, Nigeria is not short of raw materials, right? And demand is not a problem really.
Nigeria may raw material be shorter, so Nigeria raw material also we have to get from rest of the world, because जो रॉ मटेरियल रिफाइनरी वहाँ पे आ रही थी उसमें शायद अभी टाइम लगेगा और साल 1.5 साल और लगेगा. So Nigeria में raw material also has to be sourced from outside.
Okay. So is that the constraint in Nigeria, or are there any political considerations?
No, there is no political constraints as such. To begin with, we had constraints on the port capacity limitations, which was resolved. Then we got into the factor of higher freights, because we knew in Nigeria the demand is going to be, which will take about 50% of the plant capacity, and rest of the 50% you will look to export, and that was also considered natural, because that would take care of your dollar requirements in Nigeria as well. But the higher freight costs are limiting the exports. If from there you have to export to America or any other jurisdictions, so that viability as of now is a bit of a concern.
Okay. Exports in general, if you look at export-oriented firms that are operating in India, they're doing quite well in terms of exporting their product all across the globe. So that this is a Nigeria specific problem, exports, because otherwise exports do not seem to be too much of a problem globally.
But so exports now grow bhi nahi hue hain, because even the Indian companies who are looking at exports are also constrained by higher availability and the freight costs as well.
Sure. So, but do you see a difference in terms of export? Do you see a difference between BOPP and BOPET films? Are BOPP doing better in volumetric terms, in quantitative terms? Is BOPP doing better than BOPET?
I think
my understanding is that BOPP is doing quite in volumetric terms. BOPP exports from India are doing much better than BOPET. So is that something that you have observed?
BOPP में what had happened was, as I said, whatever supply constraints I spoke about, which were there in the last couple of quarters, they were more on the BOPP raw material availability rather than the PET raw material availability. So probably that has led to a higher exports of BOPP. So some of the plants in the Western world and the Europe probably didn't have enough raw material to operate at the higher their peak capacity, so they had to curtail their production, while if India had availability, so there was obviously export potential from here itself, which has happened.
So India is better in terms of raw material availability right now?
Yes, India.
For both BOPP and BOPET?
So BOPET is not an issue across whether in India or elsewhere.
Okay. And one more question, Bhatia ji, I had about this the exchangeability of, let's say, BOPET and BOPP. So it's a technical question that I have no idea about in terms of, are the same kind of machines, can the same machines be used to produce both kind of things?
No.
It's only raw material. Okay. They cannot be remodeled or reconfigured to produce. Okay. All right. Thank you, Bhatia ji. I'll come back in queue. Thank you.
Thank you. The next question is from the line of Shubham Agarwal from Equitas India. Please go ahead.
Yeah, thank you. And first of all, congratulations to the entire team of Uflex. Sir, my first question was relating to the industry. So I just wanted to understand over the next 18 to 24 months, what kind of capacities that we are expected in BOPET and BOPP to come up globally, and how would it impact the demand scenario and margin, if any?
I think in India we are likely to see a higher capacity expansion over the next 2 years in BOPP and BOPET. Globally, the capacity increase does not seem to be a challenge, given the announcements, sort of made so far. So in India, as I said, India can absorb additional, because now the plant sizes are larger. So India may agar 10-11% growth rate hai, so India can absorb one plant each year for this, and another plant for export purposes. But if there are more than 2 plants of BOPP and BOPET are coming on stream, obviously, India may thoda sa pressure badhega. But I think overseas mein aisa koi capacity expansion is tarah ka nahi hai jo which can sort of dampen the industry position.
Okay. So basically you are saying for each BOPP and BOPET, 2 lines are more than enough as of now in India per year. That is total 4 lines. More than that would be a challenge.
Yeah.
Okay, got it. And then secondly, I just wanted to understand, like, given the demand scenario currently is very robust, I wanted to understand which are the key sectors where you are looking at very good demand coming from.
I think I'm told it's across all the segments, but basically because our things mostly go into the food packaging and that's where, so there are e-commerce activities on where, if you, which is increasing, and pandemic has really fueled the e-commerce business, which actually consumes. So apart from the primary packaging, the secondary packaging consumption, if you have, something, a shampoo, which you've ordered. So the shampoo, the plastic bottle in which, or the pouch in which shampoo or that liquid is. Then on the top of it, they'll pack it in a bubble wrap or any other similar material, and then there is a cardboard box on the outside. So it's not only your polyester or BOPP which goes into the plastic, but also the secondary packaging, which is poly. Again, another subset of the polymer chain. So all this is really helping the demand side. Also on a fruits, vegetables and all that now, even when you order on e-commerce, each piece now you find is wrapped in, I've seen, at least in my house, even when I order a papaya, it's packed outside either in a white poly coating, or a sort of what do you call that, net sort of nylon and all that material. So I think we see, because our consumption is largely for the food packaging. So I see that the demand is going there. The demand is going in the e-commerce market all across. Even we don't make those PET bottles. But when I look at some of the PET bottle supplier companies, and they also happen to be sometimes are raw material suppliers also, they're doing exceedingly well. There's so much of demand for the PET bottles today, much more than it was pre-pandemic. So everything which is PET is more in demand now.
Correct. No, sir, fair. And so if I take this question slightly ahead, currently we are looking at a situation where substitute of packaging, whether it is aluminium or whether it is tin or whether it is paper, everything is on fire. So do you see a situation where some of the products which, let's say, are packed in aluminium or tin gets transferred to BOPET or BOPP? And is there a case that has happened?
So I think it depends on the product. So the flexible packaging is innovating enough to at least migrate from the rigid plastics to, like your shampoo, your hand wash, and some of the other liquids, the stand-up pouches. All that migration is where we seeing is happening. On the can migration to, and on the other hand, there is migration also happening from the PET bottles to glass bottles also, at least in the restaurant space, where when you're dining outside. So nowadays you find that you go to the restaurant, so they'll bring the water in a glass bottle rather than unless you order a PET bottle. On a can to plastics, I think the requirements are very, very different, very, very specific. And, there are products like cold drinks or, beer, which comes in can and which comes in the PET bottles, or it comes in Tetra Packs also. But the consumer preference there in terms of the whether he wants to drink this in a can or a bottle or a Tetra Pak is driving that consumption. So obviously the higher paying consumers can afford a can, and the others would drink from a PET bottle. So, but on an overall basis, I only see that migration happening from a higher cost packaging to a lower cost packaging for the products where the MRP is not very high.
Okay, got it. Fair enough. So coming to the capex part, so you mentioned we currently have 3 projects in line, which is expected to get completed by the end of FY23. So I wanted to know what is the exact amount of capex that is left to be done on all these 3 projects, if you have the number.
I think total, to my mind, I think say about 400 odd crores or so. Would
400 odd crores.
Yeah.
Okay. And but earlier in the call you mentioned that the long-term debt can hit a ceiling of 3,000 crore, which is a 500 crore addition.
So why crore hai already? 26, 25, 82 crores hai net debt. That is why I said around 3,000 crore it can be.
Okay. So, but all in all, we have just 400 crores of capex left, right?
I don't think so. There's anything other than this. Anything other than this is only normal, your sustaining capex, which you keep on doing on a year-to-year basis. No?
Got it. And then earlier in the call, you also mentioned that the way you track the EBITDA is EBITDA per kg or EBITDA per ton. So, sir, would it be possible for you to tell us what was the average EBITDA per kg for BOPP and BOPET respectively? It would be really helpful to track.
No, we're not sharing that number. We're not sharing those numbers.
Okay. I understand. No problem. And lastly, on the revenue potential, given that you have already shared the utilization level. So, given a situation where we can reach up to 105 and then Nigeria also picks up, what is the additional volume from the Q3 level that we can expect?
I think Q3 say, whatever is there now, we can expect max 10%.
Max 10%.
Yeah, max 10% from here on an overall basis. And now then the additional volumes will come from these enhanced, these new capacities on aseptic, Dharwad and Dubai CTP.
Dubai.
Then we'll have the volumes coming, setting in from this, starting from the Q1 of this year to Q3. So FY24 will be the first full year where we will see the impact of these additional capacities coming into play.
Okay, fair. And sir, would it be possible to give the revenue potential for all these 3 projects based on current prices?
I think Dharwad should be about 800 crores. Aseptic should be about 600 odd crores, we say 500 odd crores. And Dubai should be about 150 crores.
Okay. Great. So we still have around 1,200 crores of additional plus 10% volume growth for next 2 years.
Yeah.
Fair enough, sir. Thank you for all your answers and best of luck.
Thank you. The next question is from the line of Chirag Singhal from First Water Capital. Please go ahead.
Thanks for taking my question. Mr. Bhatia, congratulations to you and the team for a great set of numbers. Most of the questions have been answered. Just one more question. When can we see the ramp up beyond the nameplate capacity? So you mentioned that there is a warranty period, and after that you can undertake debottlenecking and there will be some sort of...
Next 1 year it will happen. The next FY23, this ramp up will be there.
Okay. That's it from my side. Thank you, sir.
Thank you. The next question is from the line of Yash Dantewadia from Dante Equity Research. Please go ahead.
Hello. I'm sorry. I had a question regarding the Nigeria capacity, and I think that's already answered. Thank you.
Okay.
Thank you. Before we take the next question, we would like to remind our participants you may press star and 1 to ask a question. The next question is from the line of Ayush Jalan, an individual investor. Please go ahead.
Good evening. Thank you for the opportunity and congratulations on a great set of numbers. I had a couple of quick questions. From the last con call, you had mentioned that our credit ratings have been upgraded. So have we seen any improvement in our interest costs because of that?
So we're still working with the banks to make that happen. State Bank has reduced it by a couple of percentage points already. And I think with all other banks also, this will happen. But this will happen largely on the rupee side because this is a local rating. And as of now, the long-term debt on India balance sheet is only about 1,000 crores. Working capital also is likely to be impacted, but that will come up in their respective renewal also. While the long-term part, with a few banks we've already worked it out, and other banks are work in progress.
Okay, great. Thank you. So my next question is on the recycled films. Are you seeing any increase in inquiries or demand for that given the increased raw materials for the BOPET and BOPP? Are they similar now in costing or is there still a very big difference?
I think the difference in costing is not much, but the difference in the realization is definitely much. So, I think broadly what we see is that, post the pandemic, the focus will be again back on, the recycling and basically for the plastics industry as such. So currently, while Europe may have about 40% of their plastics being recycled and America 25%, but still the recycling in the packaging business in the plastics still continues to be at a quite a low level, and we've seen that the authorities across the world are putting up need for more recycling of the plastics and all that. So I think that is going to be gaining momentum, and not only gaining momentum from a point of view of players like us or many others in the industry. Because we are in packaging space itself also, which is where the real, the challenge is that, how do you recycle something which has multiple layers and all that. So those solutions will continue to be showcased to the world and to the respective authorities that, look, there is a solution to this. Yes, this solution has not been, implemented because, the differential probably does not justify that. But if the regulatory pressure is there to do these, like, today, the way it happens in India, while the government says that, the plastic waste has to be put in, used in the boilers by the cement industry and all that. But actually it's happening only on the paper.
Okay.
So, there are truck movements shown, there are collections shown by some of these agents, and, there are, but if I look at the price which they are charging or which they are being paid, तो वो उनका 100 किलोमीटर का डिस्टेंस भी नहीं कवर करता. Forget about the cost of picking those, packing those and sending to those cement companies and then cement companies using in their. So I think even in India, we will definitely see a new EPR guidelines coming in the very shortly. All the developed countries are already looking at expanding scope of recycling. So, the plastic bottles recycling into yarn, and now even for the PET chips, which is used in the manufacturing of the PET films, is already gaining momentum. We have that plant now in India already. We are setting up that plant in Mexico and in Egypt also, where the glass the PET bottles are collected, and then you recycle them, make the PET chips from there, which you use in your polyester films making, which commands a better pricing as compared to so two factors are achieved. One, your raw material sourcing become local partially, and for these conversions you are able to get a better pricing. So today they are not mandatory, but I think the way the regulations will come, they will sort of become mandatory, or it will so happen that they'll be when they become mandatory, even outsiders will come and set up those capacities to take advantage of those regulatory the business opportunities created by the regulatory changes that are coming our way. So I think the whole focus around the plastics recycling, increasing that recycling levels, because if you ask me, in other substrates, the reason, whether it is can or it is your cardboard or it is your glass, I think the recycling levels are pretty high. They are as high as 80%. So plastic is fairly well behind that. Okay. But the advantage in favor of plastics is that on an overall, the carbon basis, it is still the lowest. So there is one deficiency today, that it is not being recycled, but on a carbon footprint across can or glass or other things, it has the lowest carbon emissions. So that's a plus. And now the packaging, once you have more focus coming on recycling of the packaging, plastics, I think the plastic will no longer earn a villain role than the way it is being reflected today. But if we don't have the plastics, the food wastages are going to be humongous. Even today, across the world, 50% of the food is still being wasted, despite the use of the plastics as a primary source of packaging food. Now, whether it is in the developed countries, that wastage is on account of your supply chain or other issues, and in the developed countries it's at a consumption level, and all that is different. But the point is, if plastics is not there, then at a farm level, would you be able to pack those vegetables in a glass or a aluminum container? Will there be so much of that will increase the costs so much, and the carbon footprint so much that we can't even imagine. So so that this world is not deprived of the food, I think the plastic usage will only keep on increasing. Rather, there is the food now, United Nations Agency for Food and Agricultural Organization, FAO, they suggest that, to reduce the food loss, waste and loss, you must use more packaging than what is being used today. So they say, advocating that, please increase the use of the packaging to reduce the food wastages, which are as high as 50% of the production levels. And the only way to do this is, you pack as much as possible.
Thank you, sir. Thank you so much for a very detailed answer. That's all from my side. No, sir, but it's very good to know that this is what the thought is, and there's always a fear that plastics would be banned, that could happen to the industry. So it's very reassuring.
अच्छा, मैं आपको ये बताता हूँ. देखो, दुनिया में चाहे चाइना हो, चाहे इंडिया हो, चाहे यूरोप हो, चाहे अमेरिका हो, सब लोग मिल के 4 चीजें सिर्फ बैन कर सकें. एक तो प्लास्टिक कैरी बैग, एक प्लास्टिक के स्ट्रॉज, एक प्लास्टिक की कटलरी और एक थर्मोकोल. इन 4 चीजों के अलावा दुनिया में कोई भी ऐसा देश नहीं है जो इनके बियॉन्ड जाके कुछ बैन कर पाया हो, बिकॉज इन 4 चीजों के बाद में whatever is the use of the plastic, that is there for food preservation and dispatch, logistics, and till it reaches the consumer. अब उसका कोई ऑल्टरनेटिव है नहीं. अगर आप प्लास्टिक में चिप्स पैक करने बंद कर दोगे, आप पेपर में करोगे, तो वो चिप्स का पैकेट 2-4 दिन से ज्यादा उसमें वो फ्रेशनेस रहेगी नहीं. So how will you consume? Which will mean कि जितना अभी आलू का यूज चिप्स में होता है दुनिया में, वो सब खत्म हो जाएगा.
Correct.
So at least I have to see one country which could think beyond these 4 things to put a ban on for the use of the plastic.
Correct. Sir, has there been any government help on using those enzymes to make the plastics more biodegradable? I think last time बोल रहे थे that they'll have approached the government.
That still remains a work in progress.
Okay. So thank you once again for all the detailed replies. Wish you all the best for the coming quarters, and thank you so much, sir. That's all from me.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Yusuf Nasrullah for closing comments.
Thank you everyone for joining us today, and we look forward to staying in touch in future quarters. Have a nice day.